It's good to be back home all the way from Kigali. That was the last time you saw me. I did promise that the next time you see me, I'll be home. It's good to be back home here in Nigeria, and you trust me, I'm going to give you all the gists about what I did in Kigali, Rwanda, and of course, well, a pleasure to be there with the president, even though we're not on the same row. But it's good to be back home here for Business Morning. It's 55 minutes of current and relevant business talks. That's what we do here, and I'm Ini John Mekwa. Starting off with what's going on in the oil prices. Across the world, prices rose today. The United States President Donald Trump has warned that Iran better get moving amid a deadlock in peace talks, while experts are pointing to record low inventories. U.S. President Donald Trump's warning to Iran over the weekend signals that the impasse between Washington and Tehran over a peace deal and reopening of the Strait of Hormuz could lead to resumption in armed conflict. Unfortunately, because President Trump has said yesterday on Truth Social that for Iran, the clock is ticking and they better get moving fast or there won't be anything left of them. Time is of the essence. That's what President Trump is saying. But anyways, all of that has driven price up. We see Brent 1.55% in the green, $110.97. WTI is also up 1.86%, $107.38 a barrel. So while a fragile ceasefire was reached in April, tensions between Iran and the U.S. continue, with Tehran keeping the Hormuz water mostly closed, while the Trump administration continues to blockade Iranian ports. And the Strait, prior to the war, saw nearly a fifth of the world's oil and gas supply flow through it. We have our troubles here in Nigeria from the oil and gas sector. Dapman has issued a statement responding to a lawsuit filed by Dangote Petroleum Refinery challenging the issuance of fuel import licenses in the country. In the statement, Dapman confirms that the case seeks to set aside import licenses issued by the Nigerian Midstream and Downstream Petroleum Regulatory Authority, that's the NMDPRA, to petroleum marketers, as well as the Nigerian National Petroleum Company Limited, that's the NNPC, related positions on fuel supply regulation. The association stresses that import licenses are legal instruments established under the Petroleum Industry Act and are designed to ensure supply security, not to disadvantage any producer regardless of size. Dapman notes that its member companies have invested heavily in depot infrastructure, logistics networks, and compliance systems based on validity and stability of existing licenses, warning that any attempt to invalidate them could create uncertainty in the downstream sector. While acknowledging Dangote Refinery's rights to seek legal redress, Dapman maintains that regulatory decisions on import licenses are lawful and necessary to guarantee adequate fuel supply to Nigerian consumers. And now let's see how the market closed last week. Mostly positive. It's still a very positive market here in Nigeria. So the All Share Index is sustained the 250,000 level, closed at 250,330.92. The market cap also went up more than 2% at 160.444 trillion naira. Activity mostly green. In fact, all green. Volume green at 7.77 billion, value green at 374 billion naira, and deals more than 400,000 in a week. Yeah, this is the new look in Nigerian market. The sectors also did well. We saw banking there up almost 3%. Consumer goods also up. Industrial goods really up 4.66%. That's a huge move. And then insurance is gaining traction again. Just oil and gas lost out of all of the excitement of last week. Top gainers, we see Beggar Paints, Score Nigeria, they were the top ones at the close of trade, as well as DA Communications. And then for top losers also, we see Zikis Agro, really catching a lot of attention these days, the Initiates PLC, and NPF Microfinance Bank. And talking about the markets, the capital markets, we did see that there was, okay, we have top trades also. Top trades had First Holdco, United Bank for Africa, as well as Champs. And still talking about the markets, we saw stakeholders in the capital market celebrating their own 50 years of the market. That's stockbrokers and the capital market, the finance market in Nigeria. They did hold to celebrate and remember 50 years, 5 decades is what it's been in Nigeria's financial market. And so we had a lot of the who is who in the market, in the sector. They came together to put into remembrance the CSCS, the SEC, and all of those regulators had representatives to remember 5 decades of Nigeria's financial market, the capital market, and of course, as we've seen, following the numbers, it's green, the sentiment is positive, and that is supposed to be sustained. And what are those pillars that will sustain this positive sentiment that we're seeing in the market? Those were part of the conversations that were held right there at this meeting, celebrating and assessing Nigeria's financial market, while also celebrating 5 decades of existence. And in the next 5 decades, what would the numbers be like? Stakeholders are very positive about it.
I think over the last 50 years, since the founding of Financial Trust, that we've had a real dramatic growth in the industry. SEC gets created in 1979, and of course SEC is the regulator. So once the regulator decides to expand the space, you have the growth. So from brokerage firms, issuing houses, portfolio managers, trustees, custodians, and so forth and so forth. So most of these institutions in developed markets are required to grow capital, to protect investors, and so forth and so forth. You need all the market participants to be registered and incorporated. And I think the regulators have done that over the years, from the self-regulatory organizations like NGX, NASD, FMDQ, LCFE, all as SROs in their own rights, and then the federal regulators, CBN, SEC, NIA, and so forth and so forth. So expansion has happened. Market depth has grown, but we still haven't scratched the surface. Many of Nigerians are still unbanked. Many of Nigerians don't get involved in financial instruments or different asset classes. Collective investment schemes have not been taken up as widely as possible. So there's still tremendous room for growth in growing investor bases across all parts of the country.
All right, so that's it. How to sustain this positive sentiments that we're seeing even beyond this period. That was another conversation, as you know, the stockbrokers or the stakeholders in Nigeria's financial markets are celebrating 5 decades of existence. Now, well, obviously I was around part of last week. I was in Kigali for the Africa CEO Forum, which started on Wednesday. So I did send in reports and, of course, some of those interviews that I had. But I put it all together just in case you missed any part of it. I put it all together in this report. And then, of course, we have another part of it after. So this is like a summary of the 2-day meetings in Kigali, Rwanda, for the Africa CEO Forum. Africans and representatives of countries that do business with Africa gather for 2 days in Kigali Convention Center to have conversations that will shape Africa's future. Although it is Africa CEO Forum, indicating that the focus will be on the private sector, Policymakers and regulators know that it's a good platform for high-level networking, seizing new business opportunities in an environment conducive to transact, among other possibilities.
Powers say go and control something somewhere. And that's happening today here.
Yeah. This is the reason the President of the Republic of Rwanda opens the events with a topic which has been perceived to be at the heart of development on the continent.
That is how Africa is treated. So these powers you see that come here lecturing people on democracy, human rights, and they are doing it with one arm, and the other, they are just taking away everything that people own. And this is what is critical. This is why Africa, leaders of Africa, some of whom are here, brothers, and the CEOs and other Africans, I think we need to give ourselves value of some kind.
The president is not alone in this line of thought. The International Finance Corporation has also made the same observation.
Africa cannot continue shipping raw materials only to repurchase them as finished goods at a premium. Cobalt, lithium, manganese, graphite, Africa critical mineral situates this continent at the center of the global energy transition. Our collective obligation is to ensure that strategic position yields local wealth and industrial employment.
With pension fund currently exceeding $1 trillion on the continent, the 2025 Africa Wealth Report by Handley and Partners indicates that total private wealth is at roughly $2.5 to $3 trillion, while African institutional capital, which includes pension funds, sovereign wealth, and funds, is up to $4 trillion, and it's available domestically for investment and infrastructure financing. Little wonder then that the perspective that Africa does not lack capital is becoming globally accepted. However, there's a gap in integration and coordination for developmental purposes.
Industrial corridors linking production hubs, digital customs systems reducing border friction, efficient ports and logistics networks, and cross-border energy infrastructure. Integration must come from declaration to real economic reality. The next decade will not be defined by detached progress, but by system-level transformation. The question is no longer whether Africa can grow. It is whether Africa can grow as one integrated economic system.
President Tinubu.
Although originally scheduled for day 2, presidential panel discussing the sovereign test, can Africa turn alliances into assets, goes on the first day.
We need to put our money where our mouth is and develop a relationship. Luckily, we have African trade agreement that should not be left on the drawing board, should be activated properly.
For his Gabonese counterpart, President Brice Nguema, the participation of the private sector is being encouraged by reforms that would create certainty in the business environment and also lower risks. Both leaders acknowledge that there's yet a lot to be done in building a future that Africans can be proud of. On the second and final day of the forum, one of the first sessions has Nigeria's Minister of Communication and Digital Economy, Dr. Bosun Tijani, along with the Minister of Foreign Trade in United Arab Emirates. There are also representatives from Afrexim Bank, Timbuktu, and IFC. They joined to discuss leveraging domestic capital to catalyze African innovation at scale.
In financial inclusion-related matters, the FID worked quite closely with our central bank to ensure that the right policies were put in place. There was strong emphasis on helping to work with the banks as well to capitalize Nigerian banks better to use technology better in the financial sector in Nigeria, which is why at some point you find that in some of our banks, the use of technology is even way much more advanced than in the US.
For the panel, catalyzing African innovation at scale would require attention to building systems.
They need to be able to trade with each other in our currencies without the need to resort to, FX.
Moving goods and people in a decarbonized system enjoys the session.
I think Africa can be decarbonized, first of all, but my greatest fear is that, we decarbonize on someone else's terms.
Then for a second time during the forum, President Bola Tinubu participates in a session, but this time he's the only guest for the scheduled conversation on holding the line, Nigeria's reform bet in a fractured world.
It is very necessary to reset, recalibrate, and reform the economy. It is a fake life to think you can, in a global economy, continue the subsidy that is wasteful. It's an encouragement to falsification of papers, smuggling, and that is a very critical situation for the country. You want good hospital, well-equipped hospital, and you don't want to pay taxes. How do you care for the vulnerable? And how do you protect the future?
Some points stand out from the 2026 forum.
We got the size and we got the masses to lift the world scale global markets. Africa's massive, vast, huge, gigantic. To embrace it, we've got to grasp it. Make Africa active, increase our profits, generate generational wealth. We've got to do it ourselves. No handouts, no begging for help.
Ini John Mekwa, Channels Television News. Yeah, that was a part of what I was doing most of last week in Kigali. But I also had to sit down with the Minister of Finance and Coordinating Minister of the Economy. I believe that's his first one-on-one since he became minister, and I was fortunate enough to get that privilege. I'll give you that in a bit. But first of all, let's discuss what happened also on Friday, which is Nigeria's inflation number. We saw that, and I think when you read through a lot of different platforms, it seems people are still trying to grasp or maybe relate with what it says. So, of course, there was a surge in headline inflation year on year. That's expected. Because you know the troubles that the world has at this time, the geopolitical issues going on. Even the United States is facing it. Nobody dares to reduce interest rates at this time. But let's see if we can try to understand and highlight some of those points from inflation. We have Dr. Muda Yusuf right here in the studio. Of course, we know Dr. Muda Yusuf is the CEO and Managing Director of CPP. Good morning, sir, and welcome to the program.
Thank you, and welcome
from Kigali. Thank you. I was hobnobbing with the CEOs and the president. Ladi promised when I come back, you'll be calling me Ini CEO.
Of course. It was nice.
Thank you so much, sir. So we saw inflation, and it didn't come as a surprise. In fact, I think some people thought it would go higher. Looking at the geopolitics and how that's affecting energy, transport, and it all boils down, to everyone. So I don't think that number came as...
No, not at all. And just as you said, in fact, some of us were even expecting a higher number, given the fact that the energy situation has been very, very challenging. It affected transportation costs, it affected operating costs.
And still affecting.
Of course. I mean, today, crude oil price has gone to 110.
Yes.
That's a lot. So we still have tougher days ahead, arising from these geopolitical issues. But talking generally about inflation, we have seen a consistent disinflation, which means deceleration, from 2024 up until March this year. 2024 we saw inflation around 30, 34 and all
That's the year-on-year inflation.
Yes, year on year. On 2025, it came down to the 20s. So from January 2025 up until February this year, we had a very significant deceleration. Actually, in February, we had the lowest, which was 15%, our headline inflation. The main turning point was as a result of this Iran war. And that triggered what we had in March and in April. And even then, it was quite marginal, actually. Because even for the April inflation we are talking about 15.69. In March, it was about 15.38, so still very marginal. And if you look at the month-on-month,
I think,
them
Dr.
decelerated.
Yusuf, that is where a lot of people are having difficulty to understand. Now we see month-on-month food inflation dropped to 3.63% from 4.17%. Core inflation, which is excluding energy and agriculture, also dropped to 1.03% from 4.03%. So I think it's just so difficult for people to understand how come month-on-month we have a deceleration.
No, when the shock of the Iran war was more pronounced in March. That was when all these problems started. This invasion or aggression started, I think February ended.
28,
So the impact was very profound in March. So between March and April, because we are comparing one base to the other, so we have been seeing a slight deceleration. And that is what accounted for the deceleration month-on-month. And if you also look at year-on-year, 2025 April, headline inflation was 23.7%. 2026 April is 15.69%. Food inflation, April 2025, it was 24.6%. April 2026, 16%. Core inflation, April 2025, it was 26%. April 2026, 15.8%. So when you even compare with last year, there is a marked difference in terms of deceleration. That is not to say that prices are not still high. It's still an issue that a lot of citizens are worried about. We need to do something. But speaking to the data, we have seen a significant deceleration between 2024 and 2026, significant. The main turning point, which is what we are dealing with now, is this Iran war. Unfortunately, it doesn't seem to be abating, because we are seeing some very serious rhetorics now. We are seeing another attack on UAE, drone attack on all of that. Crude oil price has gone to 110. So we just pray that something happens, at least on the diplomatic front, to ensure that we see a moderation. But that is the biggest issue that is driving inflation. Now, you know what energy is? It affects transportation costs. Transportation costs affects food inflation. It affects production costs because of you are using generator for diesel and all of that. It's also affecting operating costs, even for those who are not in production. Cost of operation has gone up significantly. Then we have this challenge of shipping costs. Because of this Strait of Hormuz, shipping costs has gone up by about 50%. That also has some inflationary implication. Then, of course, you have issues of the marine insurance. Marine insurance has gone up between 200 to 300% because of all these challenges, this geopolitical issue. So the biggest issue around inflation now has to do with the geopolitical factors.
And I'm sure, the MPC starts tomorrow.
Yes.
Ends on Wednesday. Of course, this is a major consideration for every country, not just Nigeria.
No, it's a global issue. Everywhere, this thing is driving up prices. But I also want to caution the CBN.
I know. You're always speaking for the manufacturers.
Yes. We don't want them to tighten interest rates, because we don't want to compound the problem of the real sector of entrepreneurs generally. Because if you tighten interest rate, it's not going to bring down crude oil price. It's not going to bring down transportation costs. It's not going to bring down, all these costs that are associated with all these geopolitical problems. It will only exacerbate the challenges of those who are entrepreneurs. So for me, I think the tightening as it is now is okay for now. We should just leave it the way it is.
Are you talking to Mr. Kotoso at this time? Because you know he stands when it comes to interest.
Yes. Because it's not easy. Because we don't want things that will also create challenges of, loan defaults. We also have our sovereign debt. The cost of debt service is very troubling. So if you have high interest rate again, that will also further compound.
You mean if you have higher interest rate?
Exactly. It's already high
but you know, a lot of people have the notion that with oil now at 110, it means that Nigeria's revenue should be increasing. So perhaps if there's an effective use of that extra, it could help to be a buffer even to the manufacturers. It's
cool. Yeah, that is true. That's a very valid argument. For instance, if you have more impact in the area of electricity, for instance, all these challenges around the energy cost of diesel and all of that, I mean, it will significantly moderate. If you don't have to rely so much on the use of generator, either for the operations in the offices or for production. And if you have a lot more impact, particularly by the subnationals on mass transit, particularly intra-city, that could also bring down the cost of, transportation. And this windfall, you can use part of it to even develop our rail system. Because rail is the cheapest form of interstate transportation. It's the cheapest mode of even the movement of cargo within the country. So we need to do a lot more in all those areas to address the issue of transportation costs and the issue of cost of production as a result of this high energy cost, and the issue of the cost of operations of businesses generally. Because those are the major, troubling points that
and this thing, I mean, if done properly, could trickle down to the consumer purchasing power and all of that. And even inflation, the prices
of course.
Because if manufacturers have a buffer, then they don't have a lot of reasons to pass down expensive commodities.
Exactly. If you're able to bring down energy costs, particularly through the electricity channel, if you're able to improve on, transportation, by the provision of, more public mass transit by all these our subnationals, rather than them building airports and building airlines, they should provide more buses for the citizens so that people can, move around with a lot of ease. Those are some of the things that we need to do. And of course, we have the security problem too, which is also affecting food supply. That is also a major issue. And thank God for recent developments. Between the U.S. and our security agencies. I mean, some of the wins we got.
All over. But unfortunately, Dr. Muda, as we were celebrating that, then we had more kidnappings and also,
Well, we will get there. When you are dealing with asymmetric warfare, it's a very, very challenging thing. Because we are not dealing with a conventional war here. We are dealing with asymmetric war. We are dealing with some guerrilla fighters and so on. You don't know where they will spring up from. So it's a very challenging thing. But I think we are making some progress as far as that is concerned.
And should we be looking at maybe a long-term plan for this escalating Middle East war? Because, we thought that with one round of talks, the U.S. and Iran would have an agreement. We've seen first round, second round. The third, I think, we don't even hear about it anymore. So it does seem like, like the Russia and Ukraine war, the world had to adjust, especially to grain, wheat, and all of that. Should we be thinking of a long-term plan, assuming that all of these talks do not work? Should we look for ways to hedge Nigeria?
We have to. Because the way it is going, each time you feel that we are seeing a moderation in the conflict, suddenly there's an escalation. And I think we need to begin to think of something more enduring. And that is why it is important to use part of this windfall to see how we can, cushion the effects, of this escalating cost. Because the cost of living remains a major problem in Nigeria and in many parts of the world. And governments all over the world are taking some steps. We need to support our farmers a lot more to ensure that the cost of their inputs, I mean, we are now in rainy season, planting season, we need to support them with lower cost of inputs. You know, I've talked already about issues of transportation. We need to invest a lot more in public transportation so that the citizens rely less on private sector provided means of transportation. We need to see how we can do some heavy lifting in the area of electricity, because I know it's a major
area
that we need to address. I know the government is struggling with this subsidy problem in the electricity sector. The reform is a very challenging one, but in the meantime, if there are some heavy lifting that the government needs to do to support the electricity sector, I think the government needs to do it, notwithstanding the fact that we are talking about reform, we are talking about decentralization, but there is some heavy lifting that needs to be done so that at least we can have better access to electricity. If you have that, the energy components of this crisis will be significantly moderated.
And you know, when you attend meetings such as the Africa CEO and AFDB, Afrexim Bank, you hear a lot of need for integration, because what I lack in Nigeria, Kenya might have, I guess if we had better coordination and integration of resources on the continent, some of these things can actually be dealt with, you know, without looking for dollar and things like that.
Yes, there's a lot of value in integration. You know, if we're a lot more integrated, I mean, the need to depend on countries outside the continent will be much less. You know,
and that will reduce costs.
It will reduce costs.
Straits of Hormuz will be less significant, you know, to Africans.
It will reduce costs significantly. And there's a whole lot that we can do in terms of synergy among African countries. But there has to be serious political commitment, you know, to support connectivity. Because you cannot integrate properly, economically, if there is no connectivity. So we need a lot of connectivity in terms of, you know, road network, rail network, shipping, aviation. That connectivity is very important. And I also noticed that issues around visas also came up.
Yes. And Nigeria has now given a 30-day, that's a month. But I mean, it's quite easy going into Kigali as an African or as a Nigerian. You just buy your ticket and then you now hop in, you know, and I hope it can be like that for most countries.
They make a lot of difference.
Yes, it does.
It helps the economies of those countries. It helps the hospitality industry, you know. So a lot more countries should do that so that we have a lot more ease in terms of movement across the country.
I can tell that. I mean, I know how much I spent on transportation, just going from the hotel to the convention center every day, you know, and maybe sometimes you want to go out and see the city. I can imagine how much I spent. So the small businesses, the food that I ate, the money in transport, in hotels, those are businesses that have been affected.
A lot of value to it.
Yes.
And even beyond the continent. Who says that even for people who are carrying whether EU visa, US visa, who says you cannot give them visa free? Let them come and spend the dollar.
Come and spend the money.
Yes. We should make it easy for a lot more countries.
Yes, I saw a lot of foreigners at the airport here in Nigeria. The visa on arrival area was really busy. So I think if that is eased, we'll have more foreigners coming to the country.
More foreigners will come in.
And
who knows? They will spend, they will invest.
We don't have to wait for diaspora. Let them bring the money.
Of course, of course. We need to ease movement.
Yes, we really have to. Thank you so much, Dr. Muda Yusuf. Always a pleasure having these conversations with you, and enjoy the rest of your day.
Thank you very much. Thank you.
All right. So talking about encouraging businesses and all of that, the Minister of Industry, Senator John Eno, visited a paper mill to get first-hand information and experience of what's going on. And he did notice some of those challenges, which he says he would deal with, discussing with the Minister of Finance and Coordinating Minister of the Economy. Let's see where he visited and some of those things that he observed. The Minister of Industry, Senator John Eno, arrives for a scheduled visit to a paper manufacturing facility in Ogun State. The minister says that this is part of a broader effort by the government to drive and assess the state of domestic production and chart a path towards industrial self-sufficiency.
You know, their pricing are not competitive enough. And why their price is not competitive enough? Because everything that is imported in terms of textbook is imported, you know, without any duty at all. You know, so, but meanwhile, you know, the printing press that is doing the same thing in Nigeria has to pay duty on almost every component that enables him stay in business. So these are things that we need to tackle. These are things that we need to address, especially now that we have a Nigerian industrial policy whose main emphasis is on value addition, is on production, and is on processing. You know, so a visit of this nature also affords me the opportunity to engage directly and to see what the challenges are and to see what government can do to enable those challenges and to see how we can enable industrial growth and processing.
The minister's observation is spot on with the reality, according to Nixon Paper Mill executive.
Importation is much. Even some imported paper, the quality is poor. And also our imported materials, chemicals, the duty is high. And also some of education materials, they are still printing outside. And some imported paper, they are using education materials, put zero duty. So all this one is our challenges.
What do you want from the government?
We hope, number one, government supposed stop to import less than 60 grammage of the paper. This paper, now we can 100% satisfy the demand, market demand. And the second one, government should adjust the tariff to reduce import duty.
Senator Ino has promised to work closely with the Minister of Finance and Coordinating Minister of the Economy to proffer solutions to the pressing needs of the printing industry. And talking about speaking or working with the Minister of Finance and Coordinating Minister of the Economy, well, I had the opportunity to sit down with him for a conversation in Kigali. That was on the sidelines of the Africa CEO. And, well, it's good to see him on the other side from the private sector. And we thought that heading the tax reform was a temporal thing. But obviously now he's in the public sector. So we say congratulations once again to Mr. Taiwo Oyedele. And that was the first thing I was curious about, this movement from the private sector to the public sector and what we can expect from him as the coordinating minister of the economy. So let's start with how you're adjusting. I mean, at first we thought that your stay in the public sector was temporal, but it seems you are now in a more permanent position. How are you adjusting to this?
I think it's always an opportunity to be able to serve, especially when you're able to solve or at least be a contributor to solving national problems. So what has happened is this started as let's do the reform and then you move on. But I think I was extremely impressed with the leadership that Mr. President provided. I think everybody will attest to the fact that the tax reform became very heated, at a point turbulent. But that leadership of saying, let's do the right thing, whether it's popular or not, people will then recognize and appreciate it later on. So I think for Mr. President also, he appreciated the level of commitment and consistency and focus. And so he then decided, well, I need you to help in another area. So, and that's how it played out. I wouldn't say it's a permanent role. Nothing is permanent in life. I think it's more focused on getting things done. So we now have the opportunity to, in fact, deepen the reforms, accelerate the implementation of the reforms that have been introduced, and then more importantly, translate those reforms into results at the micro level where people can feel the impact on a day-to-day basis. So I feel like this is a once-in-a-lifetime opportunity to make those very big impacts that we have been hoping and praying for in Nigeria.
And you used to tell us how your wife was taking to vigils and all when you were in the reforms, the tax reforms. So I wonder what she's doing now.
You know, that has been very interesting. So my wife, I think now she got used to just doing vigil. And she thinks that there's nothing else she can do other than to pray and fast and do vigil. So, and I say, you know, whatever makes you feel comfortable, do it. So, and I'm grateful for, and she's not the only one. I'm from a very strong Christian family. So, my twin sister, my mom, I have many people praying for me. In fact, people who are not even related to me, they randomly say to me that we're praying for you. So I appreciate that. So I'm grateful.
You know, to a lot of Nigerians, the monetary authority, especially in this administration, has received a lot of applause, but not the fiscal. People believe that the fiscal authority is the weaker part of the Nigerian economy. What are you going to do? What are you going to do to change this perspective?
You know, I'm very familiar with that narrative where people will say the fiscal side is not doing enough. Some people will say they're not even coming on the table, they're not playing their part. And I'm not here to come and defend that, whether it's right or wrong. What I'll say is that the roles are complementary. So the monetary side and the fiscal policy side complement each other. And therefore, it's almost like saying you cannot clap with one hand. You need the two of them. To a very large extent, I would say that the work of the monetary authority is not as complicated as that of the fiscal authority. You know why? The monetary authority, like the central bank, is independent and autonomous. They don't need to ask for your views before they change interest rates. They just do it and announce. We can't change tax rates without asking you, right? And if you're looking for consensus and support and agreement, it's tough. Then you take your bills to the National Assembly, you get into debates. You do budget, it's complex. So nothing of the major work that the fiscal authority has to do is straightforward. But that's not to make an excuse. What we're going to do now is show up better, more intentional, use data, and think long term so that people can see clarity. One of the areas where we haven't really done very well is in communication, transparency, and accountability of just even finding fiscal data. You go to the Ministry of Finance website, and you really can't find a lot of information there. And sometimes when you find the information is not consistent across different units of the government. So yeah, we would do better. That's the promise.
And so you're promising us that we will no longer have to look for Nigerian data from the United States or World Bank, right?
Certainly. You know, I've seen some of my colleagues in government reference the World Bank data about Nigeria. I said, no, it should be the other way around. The World Bank should be referencing us, not the other way. And so we work on those things.
There's also the perspective that we don't have enough collaboration between the monetary and the fiscal authorities. Do you have a plan to change this?
I'll say there has been improvements in collaboration since 3 years ago, since the current administration. It can always get better. What we are hoping to do is collaboration by design, so that it's not a function of who is there or whether they like themselves, right? So there are legal frameworks within the Nigerian system about what the monetary should do, what the fiscal authorities should do, and there are even bodies bringing them together. So what we plan to do is to strengthen those frameworks and also design, if necessary, new provisions, new legal framework, new policy framework that would ensure that things are done in a more collaborative manner, regardless of who is there part time. We want to institutionalize the reform so that they're enduring. So again, I can also say I'm very optimistic. We've always had, and I'll speak for myself as well, I've had very good relationship working relation with the central bank leadership. In fact, I can say to you that after they were confirmed by the Senate, the very first meeting was the meeting I set up between myself, the CBN governor, and my predecessor. And since then, we've worked together quite well.
Well, in spite of the fact that you're now the Minister of Finance, coordinating Minister of the Economy, you're still being called a tax man. I wonder how this settles with you.
No, I think I have no issues with the label. I see people still call Mr. President even a tax man himself because of what he did in Lagos State. I think at the end of the day, when people see results, they will make up their minds as to what label they want. But the labels are not important. It's the result. So for the tax reform, it remains one of the very important reforms of this administration. And we need to ensure that the implementation aligns with the original policy objectives. We co-created the policies. We are co-executing it, and we'll continue to receive feedback from the stakeholders and fine-tune as we go along. In the coming months, we're going to be issuing regulations and guidelines and orders to implement those reforms. For example, one of it is tax harmonization. Some of the excessive tax burden and multiple taxes at the local government, state levels. So we're working now with the sub-national for them to enact the law for themselves to stop those illegal taxes and also to automate the process so that you can take out corruption and the money goes to the government so it can serve the people better. As of the last time I got an update, 15 states have enacted the law. So we're now following up with the remaining states. So in fact, our role in the Ministry of Finance around collaboration and coordination is not even limited to organs and units within the federal government. It cuts across the sub-national. And that role, we're taking it very seriously. So we would ensure laser focus, diligence implementation of the tax reform, as well as the other reforms that will be driving from the Ministry of Finance.
It's time for a check. Good morning, everyone from around the world watching us live on Channels Television. So let's start first with our global week expectation. And starting just as we're speaking now, China has released its unemployment data report, which shows that the economic report is showing that there's an increase there. If you can take a look at it on the screen there, China's unemployment data has just been released, and then we don't have that figure at the moment. So just move straight up to the expectation for Tuesday. Europe's international trading goods balance report is expected to be released on Tuesday, and the unemployment rate is expected to flow to about 5.4%, up from is expected to slow to 5.2%, down from 5.4%. So at the same time, the European Union Statistical Office is expecting that that figure is coming at the time that the global economy is facing the impact of the Iran war, which has really dampened a lot of economic prospects there. So then for Wednesday, we're expecting that the UK's April Consumer Prices Index report will be released, and that's expected to be released on May the 19th at about early part of the day there. And then on Thursday, we have the US flash PMI report, which will be released by the country's Department of Labor. So that report is also expected to shape what's going on around the world, around the world's biggest economy on Thursday. And then for Friday, two reports are expected to be released, which is the GDP, the quarter-on-quarter GDP report, as well as the Consumer Climate Report, which will be released from one of the world's biggest economy, which we'll talk about Germany there. So that's for Friday. So that's a wrap for what we expect for the week, the third week of the month of May for the global economy. Now let's move over to what's happening around the world right now First of all, starting with today, we're having the G7 finance ministers, which include the likes of UK, the US, Japan, Germany, France, and two others there. So they'll be meeting today and tomorrow to assess, one, the impact of the Iran war on their economies as well as the global economy. So the issues of trade tariffs as well as geopolitical impacts on energy. So the G7's core members, which includes US, UK, Canada, France, Germany, and Italy, as well as Japan, they'll be meeting that. They'll be having that meeting. So a senior European official says the situation in the Middle East has highlighted how exposed the interconnected global economy is to the external shocks caused by many factors there. So that's it for what to expect for the news at the moment. And now, at the same time, we're also having that the European markets as well as Asian markets, they all fell after U.S. President Donald Trump, he's in the news again, still on the Iran war. Just last week, he had the meeting with Chinese President Xi Jinping. They talked about quite a lot of issues there, from trade to the issues of the Iran war, as well as also some deals. But that meeting wasn't all that productive. But we'll be having our guest to speak on that. If we can have him now, let's talk to Julian Keller-Gweshian, who is a macro expert. So he'll be giving us more details about that. So thank you for joining us, Mr. Julian Keller-Gweshian.
Thank you for having me.
Okay, so now let's start first. President Donald Trump's visit to China comes at a time of renewed tariff tensions and global economic uncertainty. What were the biggest economic wins or missed opportunities from the Trump-Xi meeting from an international perspective?
Well, it's not clear that they were going for an economic win. They weren't totally clear about their objectives. One thing that I think the Trump administration wanted with the visit was to communicate to the Chinese. They want to make sure, the Trump administration, that they don't have a third front. So they're deeply involved in the Ukraine-Russia war, the NATO-Russia war. They're bogged down deeply in the war against Iran that they've conducted with Israel. And I think it was a type of a meeting, if I can say it informally like this. We're not going to be doing anything in East Asia. We hope you're not doing anything in East Asia. Let's have an entente. Let's keep things as they are, and maybe we can progress on certain limited agreements on Boeing aircraft, on soy, on beef. And the Chinese obviously want the tariffs to come down in the U.S., although China's shown a lot of resilience to the U.S. trade war.
Okay, Julian, so now that takes me to my next question with you. One major outcome of the visit was China's commitment to increase purchases of U.S. agricultural products and discussions around easing trade barriers. Do these agreements signal a genuine thaw in U.S.-China economic relations, or are they more of a temporary strategic truce?
I think it's more of a temporary strategic truce. I think this was more, a visit of the Americans, of the U.S. administration, going to China in a more weakened position. Obviously, the United States is still extremely powerful, but they're in a more weakened position than when President Trump first visited in 2017, which was also the last visit of a U.S. president. So they're in a more weakened position. We've seen, I think, some of the limits of global U.S. military power as they've faced quite a wall in Iran. So there's a stalemate in Persia, and I think there was a couple of things that there is an agreement in principle to buy more U.S. oil, to buy more U.S. Agricultural products, a possible deal on 200 737 Boeing Max. However, there are these big issues outstanding, geopolitical ones. I think the Americans, President Trump, wanted Chinese to put more pressure on Iran to open the Strait of Hormuz. And obviously, President Xi Jinping wanted assurances that the U.S. wouldn't continue to meddle in what they see as affairs very close to their home. So we have some kind of initial progress, but it's really going to depend on geopolitical factors, whether the United States continues to arm Taiwan, and whether the Americans can get the Chinese to pressure Iran, which I think they've done. I think the Chinese have pressured both sides. I think they've put pressure on Iran to accept some of the American demands. And I think the Chinese are also pressuring quietly the Americans on this, because I think it's important to remember, and yet it's important to remember that the Strait of Hormuz was open on February 27th. And now it's closed after the attack. And there is, from the Chinese point of view, from the global point of view, there is a quick solution to this problem, which continues to grow every day.
Okay, so now, Julian, so now let's wrap it up with this final question. Now, beyond trade issues like Taiwan technology competition and China dominance, which is continuing to shape the relationship between both countries, how should global markets and emerging economies like Nigeria interpret the broader geopolitical implications of this engagement between the two countries? Just in 20 seconds.
Well, I think at one level, it's positive that both countries and both countries' leaders are sitting down and talking. Talking is good. It's better than conflict. And so there's a follow-up visit from President Xi to the White House, I think on September 24th. So that's good. And we'll just have to see if progress continues to be made. But diplomacy and talking is always better than conflict and everything that comes with conflict.
Okay, so thank you so much, Julian.
Thank you for having me.
Yep. Okay, so that's Global News for Monday. We'll see you tomorrow.
Thank you so much, Anita. And just before we go, we'll take you to what's going on in the market. We're still doing positive in the markets. This morning, the oil share is up 0.06%. That communication, which was the top gainer last week, we see profit taking has overtaken it, more than 7% down. Access is on the gaining, but it's still around 25 naira, 80 kobo is what we still have access. For top gainers, this time we have ABC Transport, Transnational Express, those are the top gainers. Geregu is still losing. I don't know what's going to change the tide of Geregu at this point. Okomu also is experiencing profit taking at this time. Ladi will be back at 1:30 p.m. for Business Incorporated to tell you, what the numbers look like at that time. Perhaps would have gone into 251, hopefully. But that's it on Business Morning. Thank you so much for being a part of it. Remember, you can always watch us on YouTube if you want to rewind and see this all over again. I'm John Mekwa, and I'm wishing you the best of the rest of the day. Bye-bye.